In today's video, we will be dealing with the issue of shares under our unique ledger accounts. So this is a topic that is closely similar to what we've dealt with in partnerships, in principle and in concept. If we remember when we dealt with our partnerships, we'd say that one way of raising money, finance, or capital is through two people coming together and forming a partnership. So they bring resources or money together and then start a business. And we also highlighted that one of the disadvantages of a partnership is that it is difficult to raise more money. If these two guys that have came together no longer have money, then they can't raise any funds for the business, and also they are liable for every debt that the company has. So one way of growing a business now is to change your form of ownership. So probably from a partnership to a public company. So a public company is a company that is listed on the JSE, and one way of raising finance is either through issuing shares to the public or taking loan in order to fund their operations, right? So shares that have been issued by a public company to the public basically represent capital that has been invested into the company, and that therefore means that our issued shares is an equity account and will increase on the credit side and decrease on our debit side. So before we start, I want us to look at certain definitions in order for us to be comfortable moving forward. So the first one is the authorized shares. So this is basically the maximum number of shares that a company is allowed to issue in terms of their memorandum of incorporation, which is their founding document. So they can't issue more than what has been authorized. And then the issued shares is basically the number of shares that have been issued and bought by the public, right? Our issue price is the price at which these shares have been sold or bought by the public. And then we have our ordinary share capital, which is basically our issued shares multiplied by the issue price. So this ordinary share capital is the value or the money that we are going to record in our balance sheet under our equity. So we'd say the number of issued shares multiplied by the issue price. And then lastly, we have our average share price. So this one we will deal with when we are dealing with buying back of shares. So this basically tells us about the value that was given up when we were buying back the shares, right? So it's not the price at which they were bought back. Apologies for that mistake there. It's the value that was given by the company when buying back those shares. And we get this value by taking our total ordinary share capital dividing by the issued shares at that point. But we will have a separate video for that one there. And then as we did in our elements of accounting in our basics, we talked about the behavior of those elements. So that's one thing I want us to look at now here. How would a T account of the equity look like in terms of our ordinary share capital? So this will be our ordinary share capital account, ordinary share. Apologies for my writing there. So this is our ordinary share capital account. And then, so this is our debit side. And then should be our credit side here. So this is our credit side here. So we had said that this account is going to increase on the credit side and it will decrease on the debit side, right? And then now I want us to look at the type of e-transactions or events that would increase this account. So the first thing is that we need to remember that the ordinary share capital is a balance sheet item, meaning that it would have an opening balance. So this opening balance is basically the value of the ordinary share capital at the beginning of the year. And then this would then increase by when we issue shares. So we would have our bank here, and then this bank would represent the value of shares that have been issued. So it's here it's shares issued. So it will be that number of shares issued multiplied by what our issue price. And then on this side, we would our ordinary share capital account would decrease when we buy back the shares. So here we would have our bank for paying, and then this would be for buybacks, right? And these are the only two types of transactions we would see in this account. And then there, we would close it there. And then we need to remember that here we would also have our closing balance, which will be carried down to the following month, right? So those are the types of e-transactions that we would see there. Now, I want us to go look at the types of e-journals, or how would journals for this look like. So with our issue of shares, okay, let's start with the issue. So number one here is going to be our issue of shares. So we need to think of the concepts we learned in our elements of accounting and think what is it that's actually happening in the transaction. So what happened and for what purpose, right? So if we've issued shares, so let's say issued shares, we have issued 50,000 shares at 2 rands per share. So this means that we have given up 50,000 shares to the public. So here we would need to have a debit and a credit, right? So our debit first would be, we would need to look at what's happening. So our bank is going to increase because of we have received money. So we are going to have bank there. And then that bank would be that 50,000 times 2 rands, which is the 100,000 that we have received there, right? And then now we need to look at the credit. What are we recording at the credit? So we've issued 50,000 shares and people have bought 50,000 shares, meaning that by our ordinary share capital that is invested in the company is increasing. So here we would need to have our ordinary share capital at that same 100,000 that we have there. So that 100,000 is basically that 50,000 multiplied by the 2 rands, right? And then the last thing that I want us to look at in terms of the issue of shares is the notes, which is the same thing or the same concept with that reconciliation of balances that we dealt with under our elements of e-accounting. So the note of the share ordinary capital note would look something like this. So at the beginning, we would have our authorized, shares there. So let's say our authorized shares, we have 100,000 shares. So that's the number of shares. And then here, we would have the number of shares that we issued during the year. So it's going to be number of shares at the beginning of the year. So let's say that we had started our year with 0 shares. So we had no shares when we started the year. So our ordinary share value would also be 0 there. And then the second step now is to look at what was issued shares. And then so let's look at the example that we had just did now. So we had said that during the year, we've issued 50,000 shares at 2 rands per share. So here we would need to have our 50K for 50,000. And then here we would have our 100,000, which represents the value of ordinary share capital. And then the third thing that we would have is the shares that were bought back. So let's say bought back. So similar to that reconciliation of balances, we would say that we are going to have the opening balances, we would have movements that increase the account, and we would also have movements that decrease the account. So issuing shares increases the account, as we'd seen there in our T account, and then buying them decreases the account. So here we would have the number of shares that we've bought back, and then here we would have the value of equity that we have given up. And then at the end, we would have the value, the total balance of equity. So this would be the number of shares at the end. So we would have the 0 plus the 50,000 minus the ones that we've sold. So let's say that we have now 30,000 shares that we have. And then that 30,000, the value of it would be written there. And then the important thing is that the value that we record there must be the same with this value that is here. And then those are both the values that will go into our balance sheet as our ordinary share capital. And then in the next video, we will look at the buying back of shares. Thank you.